NVIDIA has completed its $5 billion purchase of roughly 214.7 million newly issued Intel shares at $23.28 ounce each, acquiring about 4% ownership in the chipmaker. So the question is, what does this stake mean for the relationship between these two semiconductor giants? And how might this deal influence the evolving landscape of AI and computing hardware? Let's solve this equation. Welcome back, strategists. This is the resource equation, your briefing room where data, capital, and strategy collide. New here? Subscribe for weekly breakdowns of what's really moving markets. On December 26, 2025, NVIDIA finalized a private placement deal with Intel, purchasing 214.7 million common shares at a price of $23.28 per share. This transaction, first announced in mid-September, gives NVIDIA approximately a 4% ownership stake in Intel. Unlike a typical public offering, these shares were newly issued through private placement, allowing Intel to raise cash directly without accessing the broader stock market. Here's where it gets interesting. This $5 billion capital injection arrives as Intel continues efforts to regain its footing in the highly competitive semiconductor industry, particularly in AI chip development and advanced manufacturing. Intel CEO Lip-Bu Tan described the deal as a collaboration that combines Intel's x86 CPU architecture with NVIDIA's AI and accelerated computing technologies. NVIDIA founder and CEO Jensen Huang emphasized the deal's role in reinventing every layer of the computing stack, from silicon to software. Why does this matter? At a surface level, NVIDIA's investment strengthens Intel's balance sheet, providing fresh funding to support factory spending and AI chip innovation. Intel has faced years of heavy capital expenditure in manufacturing capacity, which constrained cash flow. This deal injects much-needed liquidity to help Intel pursue new chip designs and manufacturing techniques. But dig deeper, and the transaction signals a strategic partnership beyond just capital. The companies plan to jointly develop data center and personal computing products that integrate Intel CPUs with NVIDIA GPUs. For example, early previews suggest Intel may produce a laptop chip called Serpent Lake that combines Intel's CPU cores with NVIDIA RTX GPU chiplets on a single system-on-chip, or SoC. This type of integration aims to deliver tighter hardware synergy for AI workloads and gaming performance. Pause here. Does this make sense? Drop your take in the comments. Market reactions have been notable. Intel's stock has risen sharply this year, up about 81% year-to-date, reflecting optimism around its AI-focused turnaround strategy and improved execution. The announcement of NVIDIA's stake and joint development plans further boosted investor confidence, as the private placement shares were issued at a premium to Intel's recent trading price. Three numbers tell the story. First, $5 billion, the size of NVIDIA's investment. Second, 214.7 million, the number of shares newly issued to NVIDIA. And here's the kicker. 4%, NVIDIA's resulting ownership stake in Intel, enough to be a significant minority shareholder without control. Contextually, the semiconductor industry is undergoing rapid change driven by artificial intelligence, cloud computing, and demand for high-performance chips. NVIDIA is a recognized leader in AI and GPU technology, while Intel has long been dominant in CPU manufacturing, but has faced challenges transitioning to newer process nodes and AI chips. This deal represents a fusion of two world-class platforms, as Huang put it, potentially reshaping the competitive dynamics in data centers and personal computing. But wait, there's a twist. NVIDIA's move to acquire a direct stake in Intel expands its influence beyond its traditional reliance on Taiwanese suppliers like TSMC. By partnering with Intel, NVIDIA gains more flexibility in chip deployment and manufacturing options, especially in the context of increasing geopolitical risks and supply chain diversification. Remember that question about what this stake means for the broader semiconductor ecosystem? We're getting closer. Looking ahead, NVIDIA and Intel have scheduled a webcast press conference to discuss their collaboration in detail. The companies plan to develop multiple generations of custom products, including x86 CPUs built by Intel specifically for NVIDIA's AI infrastructure platforms. This could lead to new hardware architectures designed from the ground up for AI workloads, combining Intel's manufacturing scale with NVIDIA's AI software stack. Real talk. What's your hypothesis on why NVIDIA made this move to buy into Intel rather than deepen partnerships elsewhere? Share your thoughts below. Back to our opening question. Here's what we now know. NVIDIA's $5 billion stake is both a financial investment and a strategic partnership aimed at accelerating AI and computing innovation. The deal strengthens Intel's financial position and creates a framework for deeper CPU-GPU integration. However, the full impact on product roadmaps and market competition will unfold over time as new chips and platforms are developed. Now here's the number that changes everything. Intel issued these shares via private placement at $23.28 each, a price reflecting confidence in Intel's turnaround. This capital raise avoids diluting existing shareholders through public markets and signals a tightly coordinated approach between NVIDIA and Intel. What comes next? Watch for the company's joint announcements on new data center CPUs and integrated PC chips expected to roll out in the coming years. Regulatory approvals have been completed, so execution is the key factor. Also, monitor Intel's quarterly earnings and capital expenditure updates for signs of how this funding is deployed. How do you interpret this partnership? Who gets affected most? Enterprise data centers, PC manufacturers, or end consumers? What signals are you watching around AI chip development and semiconductor supply chains? Let me know in the comments. And if you found this valuable, hit that like button. Quick reminder. This video reports and explains public information. It does not offer investment advice. Now, while NVIDIA's Intel stake is grabbing headlines, there's another equation being solved in real time. NVIDIA just stole Grok for $20 billion. But there's a catch. If you think today's story matters, you need to see what we uncovered there. Link in the description. Watch it next. Subscribe to the Resource Equation for weekly breakdowns like this. Next up, how AI chip wars are reshaping global tech alliances. See you in the next one.